We're in Michigan talking with Rick. Rick, you're with Allworth Money Matters.
Hey, how you doing?
Good.
I have a couple questions. I have quite a few questions. We are in a regional bank, which I don't know if that matters, but we have
You're
a lot
in?
of.
What do you mean you're in?
Well, we have money invested just in regional banks. Smaller banks.
Wait. You have deposits there, or you own shares in?
No, we have deposits.
Okay. Thank you.
And we have a large deposit sum in a lot of in this one bank.
Okay.
And we just signed a 2-year CD.
Okay.
I tried calling you last week and we couldn't get on. We had to make a decision because we were in that grace period, and you have to sign up or lose or whatever.
How big is the CD?
Almost 700,000.
And what's the interest rate?
4 or 4.1.
And how's the title? Is it in a trust, or is it just you? Is it you and your spouse? Is it
Me, my wife, and I.
Do you own a trust?
No, we do not.
Do you have children?
Yes, grown children.
How many?
4.
Okay. So if you were and your spouse, I'm getting to an answer. If you and your spouse were to die, would the money in your estate go to your 4 grown children?
That's correct.
Okay. So look, if you had a trust, let's just talk about FDIC.
Well, yeah, FDIC insurance.
And this is
my other thought.
This is where I'm going. This is where I'm going. So right now you have $500,000 in FDIC insurance.
Correct. That's
Right.
what they tell me. But they told me that I also have $250,000 per beneficiary.
Not if it's in a trust. If it's not in a trust.
Are these transfer at death accounts?
I don't know what you mean by that.
Do they say
If we die-
Do they say TOD on the title with the names of your 4 adult children?
See that.
I don't know. She's looking at it right.
It's both of our names.
Well,
We just know-
how old are you?
Wait, Scott. Wait. So how is it titled?
Rick and Karen, and then POD.
Payable on death.
Okay.
Yes, so there's beneficiaries on the account.
Okay. All right.
Yes, that's correct.
So
Okay.
continue on with FDIC coverage limits.
Okay, so here's how it works. FDIC limit is $250,000
Yep.
for each individual times the number of beneficiaries not to exceed 8. So if I have a trust, or in this particular case, you mentioned POD, pay on death, it's you 2 times the number of beneficiaries not to exceed 8. If all 4 of your adult children are named on there, then you have coverage up to $2 million in FDIC insurance.
Okay.
All right. But in saying that, you should have a trust.
Yeah, you've got $700,000 just in this one CD, and you've got other monies at other banks.
You should have a trust. You're achieving the same objective, but you should still have a trust.
What good is a trust?
It's just the distribution of the assets is much cleaner at death.
And you've got other assets besides your CDs, I'm assuming. You probably have a house and other.
Yeah, we have a house. We have quite a bit of assets.
Okay.
But we also have, my other question too is we have another, what do I say, 280,000 in another bank, 200,000 in another little bank, another 250,000 in another, 45,000 in another one.
Yes.
Is there something we should be doing with that money that?
There are easier ways to accomplish this.
But you do have FDIC. It's per institution.
But there are programs that banks have started called, is it Cedars? Is that what it's called? Cedars. And so this is a loophole that the banks have driven a truck through, essentially. And because there's these limits, right? $250 per individual. So what happens with banks is Bank A makes a deal with Bank B and Bank C and says, hey, if I get a large deposit, I'm going to send some of that deposit your way. And when you get a large deposit, you send that deposit our way. And that way we can make sure that our account holders have insurance up to $1 million, $2 million, $5 million,
$15 million, $20 million. And it's called a Cedars program. And it goes by a couple different names and different institutions.
Allworth has something for cash
for our cash management. Yeah. So when you go into the bank, say, do you have this program? Just describe the program.
You can have it all in one place.
You can have it all in one place. And essentially what they're doing is they're brokering out the CDs in all these different places.
Okay. What is there a way? We weren't real comfortable signing a 2-year. I mean, we just made a rash decision real fast into a 2-year CD. Is there any way to get out of that without penalty?
I think it's just the interest, up until now.
Yeah, I would call them, but I believe it's just the interest up. You're going to miss. Why did you end up with what was the hurry?
Well, there's a 10-day grace period.
No.
It's not like they take the money afterwards.
No, that's what they say. You could have just dropped it into a savings account.
Yeah, we could have.
And you should have.
We were just under pressure. We were at the last day of the 10-day grace period.
Okay, well,
we got to do something.
Now you made it.
We thought if we put it into savings, then we would just lose our interest because interest rates are going down. And so we were just thinking, okay, if we lock it up for 2 years at least, and then after we did that, we thought, oh well, it's a 180-day period that you have to pay your interest for 180 days. That's 6 months, so we're going to lose $18,000, $20,000.
No.
You want to call the bank for me?
What you just said to me?
Well, I don't know how the bank's contract is. I have no idea.
Yeah, was it you were rolling out of a regular time CD, correct?
Yeah, same thing. 13-month CD we were in.
Okay, so the 13-month CD is just like a 13-month bond. It comes due, they pay it, it sits there. You can move it all and you accrue all that interest and it's paid. It could sit in a money market account or a savings account and could sit there indefinitely if you wanted to.
And you could find cash accounts that are going to pay 4.1% that are completely liquid and FDIC insured.
And you stated that interest rates are going to go down.
I don't know.
I don't know. I know I would not have bought a 2-year CD. And if you were my brother,
so you guys should have talked to me last Friday.
Well, dang it, Jacob! If we were here all the time,
His name's Rick.
Oh, I'm sorry. Sorry,
Rick.
Rick.
Jacob came from.
Okay, Rick. If we were here,
just let it sit there for 6 months and then pull it back out.
Boss. Do you do any online banking at all?
No.
And do you have any investments outside besides CDs? Do you own any mutual funds or stocks or ETFs?
Yeah, we have stocks. Yeah, I have stocks.
And where do you have them? What brokerage firm?
JP Morgan.
They're not going to want to buy them. You have a lot of different. You have a lot of different investments.
You feel like you're borrowing trouble.
You're making it harder than it really is.
Yeah.
Yeah. Yes.
I mean, unless you have nothing else going on in life and you feel like driving around to these community banks.
Well, believe me, we're frustrated. Yeah.
Okay. So ask them if you pull.
And the other thing that we're real concerned about too is the time in which we live. Now we're talking about digital currency and all this stuff. Are we going to lose all of our liquid cash that we have that's not in a stock or a property or house? I mean, everything we own is paid for. I own nothing.
That's right.
Well, here's the thing. Nobody knows the future, right? If our whole system of our government collapses and everything, we have a new order, then you want to be young and have a lot of guns and ammo.
Okay, thanks.
No, I'm just saying the worst case scenario, right? So, I seriously doubt we're going to see that, but there's no guarantee in life. Like if you were a retiree in Russia when the Soviet Union collapsed, things got pretty bad for you. Just reality, right? So right now you've got money in certificates of deposit that are backed by the U.S. government, the same agency that prints the dollars, makes the money, right? So as long as our system of government is in place, you're going to be fine. I don't know how you can't get much more conservative than that. You can't be any more conservative. So, you can't be any more conservative than that.
Is it better to invest in a bigger bank than a regional bank?
Well,
I mean, as far
it doesn't make any.
As long as you have the FDIC insurance,
it doesn't make any difference. And actually, I don't even know if the FDIC makes any difference anymore because when First Republic went out, they covered everyone.
Yeah, I know, it's crazy.
There was no risk at all to anyone. They just said everyone's covered.
Unbelievable,
right? It was unbelievable. But you're doing fine. You're doing fine. the 2-year wouldn't have been my choice, but you didn't.
Why?
Because I would have bet shorter.
Well,
I would have put it in
my guess is you, Pat, because you've made your life so you don't doesn't have to be this complicated. You're not getting any additional benefit out of life for the complication that you're going through here.
Maybe he likes the people with the savings
you
loans.
enjoy going to.
Maybe he likes the people.
I appreciate the call, Rick.